Hi all, welcome to TCM Education. In our previous video we discussed the correlation between a gap up, the volume that's attached and that is propelling the gap up, and the intraday trend that is crucial for a day trader to take advantage of the situation and deliver a 2, 3, 5, maybe 10% intraday move. That's the goal. To get an intraday move that carries as much or covers as much ground as possible and as much time as possible. We don't have any time constraints, and we close the trade. We don't have a problem closing the trade at 3:58 at the highs of the day. That's I don't think there's even one person that would say I rather not wait until 3:58 and make a couple of a couple of hundred, maybe more dollars because I have something else or better to do. So that's the overall concept. Now, as you all know, things don't work as perfect as we expect. Sometimes there is a gap up and then the stock moves sideways despite the good volume all day. Sometimes there is a gap, a small gap up, the volume is great, and then the trend picks up late in the day, so you're missing on the move. Or the trend picks up very early in the day, you're not ready, and then does nothing the rest of the trading day. So all the scenarios are available. When everything is coming together, though, and you have the visibility of the stock, then it's up to you to take advantage. Now let's take a look at Houston American Energy Corporation. Now if you look at the chart and you've seen our previous videos on splits or reverse splits, in this case you know that something is very fishy here. A stock that was worth let's call it 50 cents for months in a row, and its high was $1.40, suddenly $24. And how can it happen? What happened here? Did they discover a new petroleum field? Did this company in a new business? What's going on? So first of all, you know already the drill if you watched our previous videos. When a stock does a reverse split, that's already a huge red flag. Why? Because only terrible companies go to a reverse split to save themselves from being delisted from the NASDAQ, maybe even from the New York Stock Exchange, although the rules there are a bit different. And I'm not aware of exactly how those rules work. But the NASDAQ requests for a period of time for a share price to be above $1. If you don't comply, you may be delisted according to a set of rules. So the stock is, as you can see here on the chart, let me highlight so it will be clearer. Worth a point, it's worth 38 cents and a half. Then they announce the split. Okay, so the split is a 10-for-1 split. How do you know that it is a 10-for-1 split? I don't know, it just says here on the chart. The June 9th, 2025, 1-for-10 reverse split. So a stock that's worth 40 cents, suddenly you get for 10 shares of 40 cents worth together $4, you get one share of $4. So for you as an investor, nothing changes here. What does change is that basically it hits the liquidity of the shares of the company. So if before the split there were 10 million shares, after the reverse split there are only 1 million shares. This is quite the opposite of what the biggest companies in the world did. Apple, Nvidia, Google, Microsoft, all of those stocks went through a period of time, years, maybe 5 or 10, 20 years, they did the regular splits. So now if Apple had Apple not been going through 4 or 5 or 6 splits since its IPO, the price would have been, I don't know, maybe $20,000 per share or something like that. You can Google it. So besides, the point here is that you can see that on the split day there's no pickup in volume. So how can a stock grew up so much, tenfold, without a volume pickup. Actually, the volume is actually lower. Again, it's the reverse split. Sometimes, or most of the time, you won't be able to see it clearly on the charts. Okay, so that's actually very, very positive for the Mumu platform. Okay, now what happens next? The stock picks up some momentum, but the real momentum here is most likely speculative. Why? Because it dries out the liquidity, and this move higher brings in either speculants, either novice traders, either both, and let's read together what the company is saying. Okay, this is the news from the company itself, and they just state that unusual trading activity is happening in the stock without any merit. Okay, so who's doing this unusual activity? It's not investors that are probably not in the business of Houston American Energy. I can guarantee that there is not even one ETF that owns even one share of this company. So it's all about some speculative volume, either hedge funds, either retail traders that are piling in. Bottom line, the stock is booming. Okay, let's get rid of that. Now we are day traders. Can we take advantage of this opportunity? And I said it's a huge red flag for long term. Okay, can it be a green flag for short term? In order to answer this question, we need to look at the price action intraday. And this is the price action yesterday, guys. Now, let's take a look. The stock closes on Friday at $10.55, clearly. Then starts to move higher in the morning. So it goes from 10 to 15, that's 50%. At one point here, it is already recognized by the screeners and is being basically thrown in to us as a number one or number two stock that's on the screener in terms of gainers. Okay, so that comes actually very early. You can see it if you're observing a gainers loser screen or a top 20 gainer loser. You're gonna encounter HUSA. Okay, now assuming, and I will being that it's not this is not a live situation here, I don't know what is the spread, but I will let's assume that the spreads are manageable and tradable. How can you take advantage? Where can you take advantage? What are the technicalities here? Because we have the gap up, it's double digits going on triple digits. So this is a huge V. The volume is also a huge V. Let's take a look at the pickup in volume. Okay, you can see on a normal day it trades. Let's see how many volumes, how many shares. 100,000 shares. Yesterday it traded 18 million shares. So huge pickup in volume. That's also a V. Now let's take a look at the intraday trend. Let me arrange it. Okay, so what is the intraday trend? And where is an entry point here? What is nice about this stock? Okay, at least at the beginning, you can clearly see this methodical, highly, and I would say not characteristic to these micro caps type of move higher. This can be observed. Now, where do you enter this trade? I would say that the only places you enter these trades is either a round number like 14 or 15. And that's pretty much it. I mean, once the stock goes through this reversal at 14 and breaks 15, it's off to the races, and actually goes from 15 to 21. That's $6 in half an hour or 45 minutes. $6 on a $15 stock is 35%. Is it? Okay, maybe 30% in 40 minutes, unsustainable. Then you can see the huge sell-off bars where the stock is basically trading from as high as 22 plus, in 3 minutes is down to 19. That's $3 in 3 minutes. Okay, and then it continues lower to 1750. So the volatility here in this let's call it a 10-minute environment is tremendous. If you are entering very late, you can easily get hit with a $2-3 maybe more, and get immediately hugely red. Okay, and okay, there's no guarantee that this one can stop. Is stopping here. I mean, the technicalities here really work. Take a look at this beautiful double bottom. But again, when the stock is so volatile and so prone to let's call it bulk selling, or there is a block of shares that is being sold by the guys that bought it either 10 days ago or before the split, or are in the business and bought it after the split, or just bought it 24 hours ahead, those guys are now up 100%. And they are not in this stock. It's, I don't want to say 100%, but I will have to say that this is not a long-term project here. 99%, I would say. So 99% of the time, those projects are not long-term. They are very short-term. So what do you do here if you are late with an entry and you cannot protect yourself with a market order because the avalanche of selling will drive you down 30 cents, maybe 50 cents, maybe more. So there's a lot of risk involved here. Now, if you don't buy at those levels, it becomes, I don't want to say impossible to enter a trade, but take a look what happens next. I mean, this is the clear move higher, the continuation, then the pullback, and now the stock is basically sitting here at this 20 level for hours, has a spike of $4 that comes back into the close. I have to say that again, trading it super tough. The only clue for a day trader is this methodical uptrend. If you observe it and you trade this stock with a 1-minute bars, you have a chance. If you trade it with 5-minute bars, you don't stand any chance. If you trade it with 1-minute bars, let me actually go and look for it in a second. Let's see if I can show it to you guys. Okay, here it is. Those are, as you understand, those are areas where the stock is being halted because of the move. Okay, so this is the move here. So if you can observe and enter at 14 or at 15, I would have to say that 15 also looks a bit extended, but it works. But if you enter at 14, you can use either the, let's call it 13 or 1340 or 50 as a stop loss. That's reasonable. Other than that, everything is carries so much risk. Again, guys, you decipher it yourself. Take into account your strategy, your risk involved here, the amount of risk, and if anybody has a question, please post it in the comments below. Thanks for being here with us on this video, and we'll see you in our next one later on today.